attempts by Peugeot Citroen to dig itself out of its financial hole. Europe's number 2 car maker has unveiled the details of a deal that will see China's Dongfeng and the French state each take a 14% stake in the company. That was confirmed earlier this Wednesday when Peugeot Citroen unveiled last year's financial results. Those results unveil that the car maker remains deep in the red. It lost 2.3 billion euros last year. Despite that, outgoing Chief Executive Philippe Varin told France 24 that he's handing over a company in good shape. Shirley Sitpin has more.
Peugeot says it's stopping the bleeding. Losses were still high in 2013, but half as much as the previous year. CEO Pierre Varin is stepping down, leaving the job to Carlos Tavares. According to Varin, although the company is in the red, it's in a much brighter state than before.
What I'm very proud of today is that I will be in a position to give to Carlos Tavares the keys of the car in a fantastic shape.
PSA Peugeot Citroen, the second European car maker, has sealed a deal with the French state and with Chinese company Dongfeng. They're investing a much-needed 800 million euros each. The main goal now is boosting car sales in Asia, the biggest expanding market, where PSA Peugeot Citroen is lagging behind its rivals. There are concerns that the three main shareholders won't see eye to eye in the future. The French have already set a few conditions.
No plant will be shut down. Peugeot will have to make 1 million cars per year in France until 2016, invest 1.5 billion euros and keep 75% of its research labs in France.
Meanwhile, managers and their Chinese allies signal production may be taken out of France to slash costs. Workers' unions are dreading new company shutdowns in a few years' time.
France and Germany want to hammer out a deal on a European financial transactions tax before May. François Hollande and Angela Merkel outlined that ambition during a joint meeting on Wednesday. Merkel said that a deal before May, when voters will elect a new European Parliament, is quote, very important signal, unquote. Both leaders have committed to a tax on stock and bond transactions, but the idea is facing opposition from the financial sector, and so far only 11 European Union countries have expressed support.
There's will on both sides, and this is something which has united us from the beginning, to find an agreement on the financial transactions tax before the European elections.
We're going to take a look at the stock markets next, and in the United States, investors, they were looking closely at the minutes from the Federal Reserve's latest meeting, and those minutes suggest that Fed officials are ready to unwind the Fed's stimulus of the U.S. economy further. That prospect didn't seem to be perturbing investors too much during Wednesday's trading. We did see some losses, though. The Nasdaq, for instance, snapped its winning streak in the past few days and ended 0.8% below the flat line. Similar figure there. Similar losses for the Dow Jones and the S&P 500. In Europe earlier, we saw indices closing pretty flat. The CAC 40 was helped, however, by a strong report from cement company Lafarge, and we saw the CAC 40 trade up around about 0.25%. Looking at some other company news, shares in Crédit Agricole gained as the French bank swung back into black. The lender posted a fourth quarter profit of 612 million euros, slightly less than expected, but it was much better than the 4 billion quarterly loss announced this time last year. Crédit Agricole has suffered because of bets in Greece, Spain and Portugal, but it is now seen to be recovering from those bets. Shares in Danish brewer Carlsberg also popped during Wednesday's trading. It came as the beer maker posted a higher than expected fourth quarter profit. Carlsberg predicts that beer sales will fall this year in Europe and Russia, but it expects continued growth in Asia, where it's focusing its future efforts. And the unemployment rate in Britain edged up surprisingly at the end of 2013. In the 3 months to December, the jobless rate came in at 7.2% in the UK. It follows a slightly lower reading of 7.1% for the 3 months to November. It's the first rise since early 2013. Economists say it may boost the Bank of England's pledge to keep interest rates low for longer. And that is where I draw a line under the business news. And it's back to Luke for the rest of the news.
Thanks, Marcus. Time now also